Hello everyone, this is Jordan. This video is being recorded on the late evening of Tuesday, June 25th, 2024. Thank you so much for tuning in. In this video, I'm going to talk about the two reasons why this secular bull market in gold and precious metals is going to be a lot more like the 1970s than the 2000s. Let me get to the reasons. So the first reason is in the 2000s, you only had a secular bear market in stocks. In bonds, you were still making money. So here we have the stock market. Here we have bonds. My total return indicator, not indicator, but my total return series for bonds divided by CPI. So this is an inflation adjusted return, total return for bonds. Then you have gold, then you have silver. So in the 70s, you had secular bear, secular bear. The main asset classes are stocks, bonds, and commodities. And currencies are a fourth. Could have threw that in here, but for the most part, the main asset classes are stocks, bonds, and commodities. So stocks and bonds compete with gold. And again, in the 70s, stocks and bonds both were in a secular bear. The secular bear for bonds started 1965 by my count, and that was before it started for the S&P. We're seeing something similar now where the secular bear in bonds has already started, but not yet for the stock market, which continues to hold above the equivalent to the 40-month moving average here. That's my demarcation line for the secular trend. So again, you look at the 2000s bull market, only a secular bear in stocks, secular bull in bonds, and you had the secular bull, of course, in precious metals, gold, and silver. And so this is one reason why the returns were so much better, or in other words, gold and silver gained so much more in the 1970s compared to the 2000s. And I calculated this looking at daily closing prices from the low to the high. Gold 24x in the 70s was only 7.5x here. Silver 36x in the 70s. Only 12x here. So this is more than 3x. This one was 3x. This one, that's even more than 3x. Now, of course, I'll make the point that gold was artificially low here, but based on what the gold stocks did, had gold been freely traded, it would have started to move probably right around here, then it would have come back like this. And so the bull market, it would have made the same gains, but it just would have taken longer. But anyway, I'm droning on here, but that's the first reason, is you have the twin secular bears here. You didn't have it here. Now we only have one so far, but eventually this is, and among other things, this will lead to a secular bear in stocks. And as I've said numerous times, you're getting tired of me telling you, but for gold to go to 3,000, 4,000, 5,000, 6,000, etc., for that move, you are going to need a downturn in the stock market and a secular bear to begin. So when that begins, you have a secular bear here and a secular bear here. That's like the 70s. So that's reason number one. Reason number two is the power of markets that break to new all-time highs. Because once they get to new all-time highs, they tend to make more explosive moves. So here we have gold against silver, and we have the gold stocks, the Barron's Gold Mining Index. So we go back to the 2000s, the secular bear or secular bull that started here and here. So silver climbed all the way back up, but it didn't make a new all-time high. And of course, it still needs to rise, 70% or 75% to make a new all-time high. But it's going to in the coming years. And that will be explosive, of course. But again, not in new all-time high territory ever during this secular bull. Here, the bull, it was here in 2008, new all-time high. Then you had the GFC, then it broke this 1,000 resistance. But, again, that only lasted 3+ years. So now we are in position where gold has broken out from a 13-year beautiful cup and handle pattern, but we haven't confirmed it yet. And with gold breaking out against the 60-40, it's really close, but not confirmed yet. But gold breaking out here, this is similar to I've said this is similar to the stock market, when it had that breakout in 1982, and then it ran for 18 years. I'm not saying gold's going to run for 18 years, but this is the beginning or the beginnings of a secular bull. So new all-time high breakout, has really long way to run, and silver will get there soon enough. And let's go back to the 70s. Gold, we were on the gold standard, so this is artificial. But 1972, beginning of 1972, that's when it broke out. Just think about it back then. I think this was like 43, 45, something like that. You broke above 45. Nobody would have thought in 8 years you're going to get up to 880. You know, that after this breakout, that was 20x. That's an insane move. Same thing with silver. You go back, this was the 1920 peak. The secular bull in commodities peaked in 1920. So this was 60-year resistance here. And so that finally broke in this move in, 1967 or 1968. And you had this cyclical bear here, which came back, and then when it made new all-time highs again, a just spectacular move. So that is the power of breaking to new all-time highs. And the same thing applies to the gold stocks. This is a Barron's Gold Mining Index. I've talked about it often. This breakout in late 1964. This is a 28-year breakout. Boom. Then you had this spectacular rise for the next 16 years. I didn't put in the percentage terms. But this rise here was way more than this from 2001 to 2011. I'm not discounting the secular bull, but again, this was much bigger than this one. And this, I don't want to say this is a 45-year base, but it kind of is, because this 1980 peak is a little bit below this peak here and this peak. Of course, when you're looking at a log chart and you really compress it like we can see here, then you don't see a huge difference in these levels. So this is setting up where gold stocks, they have the potential to do that. So in addition to gold and silver, the gold stock indices are going to be breaking out to new all-time highs. And so, of course, you know, if silver does as well and gold does, and we're in a secular bull, so that's going to carry on to the gold stocks, which again, they're setting up for their own massive breakout here. I know that's a lot of talking for only 2 reasons, but the Cliff Notes version is, reason number 1 is the 1970s, you had a secular bear in both competing assets for precious metals. A secular bear in stocks and bonds. In the 2000s, you only had it in stocks. Now we have a secular bear in bonds. And again, if and when gold really moves higher and the secular bull gets going, that's only going to happen with a secular bear in the stock market. And that'll be at the same time as bonds, which are already in a new secular bear. So that's reason number 1. Reason number 2 is the technical setup and the fact that gold has already broken out to new all-time highs, and silver, it won't be that far behind. And so those breakouts are early in new secular bulls, which was the case in the early 70s and not in the early 2000s. So those are the 2 reasons. Let me know what you think in the comments. Thank you so much for tuning in. I'll talk to you guys again in the next video.